Hello, everybody, and welcome to the December daily Q&A session. Today is Tuesday, December 22nd. I'm Rachel Neighbors. This is our daily Q&A session that we do during December to make sure that you have the support that you need to set up your new solo 401k plan with Neighbors Group and solo401k.com, and to make sure that you get support in using the solo 401k you might already have with us. So welcome. We have some pre-submitted questions here. Hey, Sylvia. Hi, Yun-hee. So good to have you guys here. It's pretty amazing seeing the numbers start to climb on these Q&As every day. It's really awesome. We're really glad to be here with you guys. And we've definitely been talking around the office that an ongoing Q&A, if it's weekly or something like that, could be really helpful for the Solo 401k account holders. So we really appreciate you guys being here and submitting your questions so that we can support you. And as we get started, just a couple of items of housekeeping. We are doing these Q&A sessions every single day for the end of 2020. So if you have questions, this is a great place for us to get together live and be able to address your questions, answer your questions, make sure that you get the support that you need so that we can be here for you. And I want to share my screen, and there's a couple of resources that I think you'll also find really helpful, which can help you to get answers to your questions quite quickly. So the first is our network. This is found at solo401k.net. It is free to join. Anyone can join it, and it's a really great place for you to meet other solo 401k investors. And our entire team of experts are in the network all day long. So that's a great place to get your questions answered as well. You can sign up for free at solo401k.net, join the network, and we will be here to make sure that your questions are answered. And this is also where you can attend these trainings. The next resource I want to share with you is our website, which is at solo401k.com. There's tons of different articles, blog posts here. If you click on this little magnifying glass, that will let you search the website to search for pages. So let's say I want to look at contributions, for example. If I just type contributions into the magnifying glass, you'll see all of our blog posts and pages that cover that topic. So that search feature right here, this little magnifying glass, is really helpful for letting you pinpoint exact articles. Additionally, if you click on support, then that takes you right into our knowledge base. Our knowledge base is at support.solo401k.com. And just like our blog, there's a ton of articles in here on all different aspects of using the Solo 401k. So for example, I'm just going to type in Roth conversion as something I'm looking for, and we'll see that there are several articles that come up specifically about that topic. So between the Solo 401k network, which is again free to join, searching our website, and our knowledge base, you have a ton of resources that are available to you. I know that sometimes towards the end of the year, we really want to be in a hurry to get things done as quickly as possible. And if it takes our team a little bit of time to get back to you via email or phone, then those resources, in addition to this daily Q&A, are just an awesome way for you to make sure that you are getting ongoing support. So things really ramp up towards the end of the year in December, and we want to be here to support you. All right, so we've got our pre-submitted questions here. Let's start first with Rhoda. Rhoda asks, after a very long wait to get verified, I opened an account on Gemini, one of the 2 crypto exchanges that are available to New York residents. I initiated my wire transfer from Solera, and it was declined as it was coming from a trust. Can you advise as to my options? So I think that's question number one here for Rhoda. So yeah, Rhoda, what you'll notice in a crypto bull market, which is what we are in right now, we are in a raging bull market. The delays for getting these accounts opened is more extensive. I know Coinbase was running 2 or 3 weeks to get accounts opened. When your 401k is opening an exchange account, it does need to be an institutional account. It's not a normal individual account. So there's a much more thorough vetting process and verification process that you need to go through. So I'm really not surprised to hear that by Gemini. Now, I think that if they declined your wire, you need to contact the Gemini team. In their institutional application, you will need to let them know that you are establishing a trust account. That way, when they see funds come in from a trust, they'll know to be able to recognize those as the same structure. So Rhoda, for this particular question, I would recommend that you reach out to the Gemini support. Just know that, especially in a big bull market, their customer support delays, they are not insignificant. And that's not a diss on Gemini. All of the exchange accounts right now have extremely long processing times because everybody's trying to open accounts. So as an aside, some of you are in our Bitcoin Pro storage program. That's where we can establish a custodial application for you for your 401k, your IRA, LLC, a living trust, your personal funds, and we can have that account open for you in 1 to 2 days. So if, Rhoda, you do not want to wait for Gemini, then you definitely can explore our Bitcoin Pro storage program. But otherwise, I would say you need to contact Gemini support, make sure that they have opened a trust account for you, an institutional account, and then see what they have to say about accepting the incoming wire from a trust into a trust institutional account. Rhoda, your next question. With Biden elected, I think it makes sense to switch my traditional IRA to a Roth. So we can't give you tax advice, Rhoda, as far as whether or not you need to switch your traditional IRA to a Roth IRA. That would be a question for your investment advisor or your tax advisor. We do have a wealth management division at Neighbors Wealth. If you're interested in learning more about that, you can join the waiting list at neighbors.com. That's NABERS. But whether or not you should transition or convert funds from traditional IRA to Roth is quite a personal decision. That is a taxable event. Anytime you move money from pre-tax to Roth, you're going to pay taxes on it. So that's possible for you to do. We would need to learn a little bit more about your situation to determine if this is a traditional IRA going into a Roth IRA, or if this is a traditional IRA rolling into a solo 401k, converting to a Roth 401k. Those are some details that we are missing. If you're on today's call, Rhoda, then go ahead and make sure that you fill in some color here for us. But whether or not you should switch your traditional IRA to Roth is a question for your tax advisor. And then depending on the structure, if you've got a pre-tax 401k going to a Roth 401k, then that's going to be a different conversion process of a traditional IRA to a Roth IRA. So, okay, next question also from Rhoda. We are looking at purchasing precious metals to keep outside of the country. Who do you recommend? Well, I don't have any recommendations for you since I'm not your tax advisor or your investment advisor. If you are interested in learning more about wealth management, then I think that signing up for the waiting list at neighbors.com for our wealth management division might make the most sense. Otherwise, I would say that this is a question for your investment advisor. So thanks so much, Rhoda. Great questions here. Next, we've got a question from Nathaniel. Nathaniel says, so Lara said I need an amended adoption agreement if I want to add my spouse as a participant. Is that right? What other information do you need to do that? Really good question. So Nathaniel, I'm going to share my screen here and we're going to go into our knowledge base. So in our knowledge base, let's go ahead and do a search for spouse. There's a lot of information here about spouses, and this one in particular, spousal considerations, is one that you'll want to read through, Nathaniel, to see about adding your spouse as a co-participant. Now, We can definitely amend your 401k plan documents so your spouse is a co-participant. That's no problem. One thing I want to distinguish though here is that participants and trustees are different. So in this in this article, it says, why isn't my spouse's name listed in our plan documents? My spouse and I are co-participants in the plan. Why is only one of our names listed in the documents? Most 401k plans do not list participants by name. Rather, a trustee is listed to denote who has authority over the funds. So think about it this way. Let's say you work for Amazon and you are part of the Amazon 401k plan. They have 100,000 employees or something like that, 10,000, 15,000, 50,000 employees. It would be an HR nightmare to have to update the documents every single time a new participant was added or removed from the plan. So the plan documents themselves do not list participants. Only trustees are listed. And I know you might be going like, well, Rachel, why are you telling me that? And the point is that if you want a bank account for Solera, specifically for your spouse's funds, she will need to be listed as a co-trustee. Only trustees can have separate bank accounts. Brokerage accounts are another story, but for bank accounts, only trustees can have bank accounts. So, Nathaniel, if you want us to add your spouse as a co-participant, all you need to do is send us an email with her full legal name, and we will add her to your account. She will not be listed in the plan documents because participants are not listed by name, but she will have the ability to roll over funds based and contribute new funds based on her compensation from your business. If instead you want her to be able to have her own bank account separate from yours, then you will need to list her as a co-trustee. If you are listing your spouse as a co-trustee, email us to support@solo401k.com with a written request to add your spouse as a co-trustee, and then we can update the documents to list her by name. We need her full legal name and her telephone number to list her as the trustee. And just as a little note here, I can hear the wheels turning in your head, Nathaniel. It's okay to add her as a co-trustee after January 1st. Right now, your plan documents have been established for 2020. So your business is able to make contributions based on 2020 earnings. If you want your spouse listed as a co-participant, please send us that email so we can update our internal records. And then if you would like her listed as a co-trustee, email us that as well, and we'll get the plan documents updated for you. Great question, Nathaniel. Thank you. Our next question comes from Anand. Anand says, if you approximately made $30,000 in earned income from your business, how do you determine the contribution limits for yourself and your spouse? Is there some article on that? Basically, we would also need to run payroll for the spouse in order to participate, correct? The spouse will still have the $19,500 total contribution limit that will apply, correct? Really good questions, Anand. So let's take these one step at a time. And as you probably can guess, I'm going to share my screen again. So the first question, Anand, is you're asking about how do you determine the income limits for yourself and your spouse? So each participant is able to make contributions based on their earnings from the business. So I think I need to log back in here. Oh, it's already logged me out completely. All right, well, I'll log back in. But essentially what we want to do, go to solo401k.com. And then in our search bar here, we're going to search for calculator. And we've got our Solo 401k contribution calculator. Bam, right there. You can also find this at solo401k.com/calculator. I'll put this link in the chat. That can be really helpful to have accessible. So Anand, your question is, how do you determine the contribution limits for yourself and your spouse? Contributions are based on compensation. So each participant receives compensation from the business. The amount that each participant receives determines how much each participant can contribute. So if the business made $30,000 in earned income, then you need to determine how much you're each earning. Anand, let's imagine you have an S Corp and it's a single owner corporation, or maybe you and your spouse are both shareholders and you're each paying yourselves $15,000. And you each would be able to contribute $15,000. If you, Anand, are paying yourself $25,000, then you could contribute $25,000. And then your wife would maybe earn $5,000 and she could contribute the $5,000. So for these contribution calculations, it's based on compensation. However much each person receives in compensation from the business is how much you can use to calculate your contributions. And yes, to your second question, would we need to run payroll for the spouse? Yes, you will need to run payroll for your spouse. And then your third question, the spouse would still have the $19,500 total contribution limit, correct? Actually, no. Each participant is able to put in $57,000 based on compensation. Of course, there's trade-offs here. The more you pay yourself, the more you have to pay in self-employment taxes. That sucks. But the more you are then eligible to put into a 401k as a tax-deductible contribution. So you need to make sure that you're working with your CPA or your accountant to run the numbers. Find that sweet spot. If your business is earning $30,000 in income, determine how much you're paying yourself and how much you're paying your spouse. And then from those numbers, you can contribute based on your compensation for each of you. So it's not that the business made money. It's how much compensation did you receive in payroll? How much did your spouse receive as compensation in payroll? And from there, you can calculate your contributions. Great question, Anand. Thank you so much. Okay, next question comes from Obed. Obed asks, this is my first year with a solo 401k, and I want to make sure I have all things considered as we approach year end. First of all, congratulations on making it through your first year, Obed. That's awesome. Many of our clients have been with us for 10 years or more, so it's good that you're already getting into a nice groove. So Obed asks, are there any year-end forms that I need to fill in and send to the IRS? My account was created in Q1 this year. I've rolled over funds from a previous 401k and have not taken a distribution. Great question. The 401k does not have any reporting that's required at the end of the year. The IRS does not expect a tax return, and there's nothing that you need to file at the end of the year. But you do need to keep your plan records. So Obed, somewhere you need to have a spreadsheet or a QuickBooks account where you're keeping track of your records in your plan. You know how much came in through your rollovers, how much came in through your contributions, and how much is going out in investments, then coming back in investment returns. You need that tally, that ongoing reporting for your own internal records because you are the plan administrator. As long as you have those complete records, then you should be good. You don't need to do anything else for the end of the year. The next question Obed asks is, are there fees for year 2 onward? And if so, when are they due? And what is the value? Great question. So yes, we have annual maintenance fees that charge every year. Those fees will charge automatically to your credit card on file. If you need to change the credit card that we have on file for you, you can do that at on your website, or excuse me, on your dashboard at solo401k.com. And let me see if I'm going to be able to log in here. I might need to actually pull up a second computer because my password's not carrying over. So give me just one moment here to be a total nerd with 2 computers so I can log into the 401k dashboard. Just one moment here. You can play the Jeopardy theme song in your head if you would like, while I just get the password for logging in. Okay, give me just one moment here. One moment. All right. There's a blessing and a curse to these challenging passwords. All right, victory. So, Obed, you're asking about the fees for year 2 and what do they cover? So, we will auto charge your credit card on file, your annual maintenance fee. For most of you, that's $99 per year. And we will charge that on your renewal date. So we charge that on your anniversary date. Obed, let's say you signed up on February 1st, 2020. Then your $99 will automatically charge to the credit card on file on February 1st, 2021. We always send you an email 30 days before your credit card auto charges. And if you ever need to change your credit card on file, you can just log into your 401k dashboard here. You can see on my screen and click this update billing page. And as soon as you update the billing, then you'll have an opportunity to add a card or update a card on file. So Obed, that's a really easy way to make sure that you can update your billing so there is no interruption in your service. Now, what other people also ask is, what am I getting for this $99? Why am I paying for this $99? And I think we actually have an article in our knowledge base about this, if I remember correctly. So I have to remember how to search it, like what does it get me or something like that. I know we have it somewhere. I'll find out. Let's see. Annual maintenance. There we go. What does my 401k document fee get me? So this is a totally real question. I like to know what I'm paying for on an ongoing basis. And we are your IRS plan document provider. That means it's our job to make sure that your documents are updated on an ongoing basis. The IRS is going to require that we change your documents every year. Sometimes it's a little, sometimes it's a lot. In 2020, for example, we had increases in contribution limits and we adopted the CARES Act. In 2021, we will also have another increase in contribution limits, and I'm sure that there's going to be more regulations regarding revisions to the CARES Act that are going to be released as well. By paying the $99 ongoing, you are covered under our IRS opinion letter. Essentially, that means you have permission to use our documents, and we hold the official status of your plan with the IRS. As your document provider, the IRS can request from us a list of clients covered under our opinion letter. If you pay your fee, then you are on that list, and that's good. That means you are qualified. If you do not pay the fee, you are not on the list, and then the IRS may consider your assets to be taxably distributed. Now, that $99 a year is like less than 30 cents a day, so I think it's quite reasonable. It's a flat fee, and yes, Obed, we will automatically charge that to your credit card on file on your anniversary date with us. Great question. Okay. Next question, I think we have a couple here, comes from Catherine. Catherine says, I wanted to check to be sure I understand the in-plan Roth conversion rules correctly. Can these happen at any time? I've made the non-Roth after-tax contribution for 2020, but haven't converted those funds into the Roth part of the 401k. Great question, Catherine. So yes, you can convert funds in plan anytime. However, if you want the conversion to count for 2020, then you must convert those funds by December 31st. When it comes to after-tax contributions, converting them to Roth, it's not as big of a deal for most people because that is not a taxable event. When you go from after-tax to Roth, there's no taxes that are generally due on that conversion. So most people have a bit more of a flexible time frame. Catherine, if you were saying I'm going from pre-tax to Roth, then I would say you definitely want to check with your accountant and find out what tax year your accountant believes is most advantageous for that conversion. But yes, if you want the conversion to count for 2020, then those funds need to be converted by December 31st. So that's your first question. So your next question here, Catherine, is once the funds are converted within the 401k, what are the rules for in-plan withdrawal to move those funds into my Roth IRA? I seem to recall it's once a year, but I'm not sure if it's correct. And if so, is that once per calendar year or once every 12 months? Our plan allows for the in-service distribution from a Roth 401k to a Roth IRA at any time. That does not have to happen once a year because it's considered a direct trustee to trustee transfer. So you're not limited by that time frame. Of course, you do need to work with your CPA. Moving funds around through different tax classifications and structures is something where you want to make sure that there's some strategy to it. So always work closely with your CPA or your accountant to make sure that you are following the plan that you've established. I especially bring this up, Catherine, because a Roth IRA, while it is a great tool, I have one myself, it's a one-way street. Once money goes into a Roth IRA, it's stuck there. It cannot go back into a Roth 401k, whereas Roth 401k funds can go into a Roth IRA at any time. So what some of our clients like to do is they make those voluntary after-tax contributions, they convert them in plan to Roth 401k funds, and then they'll continue on their investing path with the Roth 401k. Whether or not that's the right solution for you is a question for your accountant, so you can make sure that you're following your investment and tax strategy. Thanks for those great questions, Catherine. Okay, moving right along. Next, we have a question from Rodney. Rodney asks, I have filled out the form and submitted with payment. Awesome. Welcome aboard, Rodney. In regard to the amount to place, can I put this into my bank's money market account until I can decide on an investment? How to secure the funds for the time being to help with my 2020 tax? Okay, I'm going to try to understand this question as much as possible, Rodney. So now that you've set up the solo 401k, you might be wondering what to do next. So you probably can guess what I'm going to do. I'm going to share my screen, and I want to bring two articles to your attention from our knowledge base. So the first is, I set up the solo 401k with Neighbors Group. Now what? This is literally an article in our knowledge base because we get this question a lot. So Rodney, I know that our team is probably working on your documents right now. We are working through the queue of applications that have come in. So this article is going to be really helpful for you, Rodney. I set up the solo 401k with Neighbors Group. Now what? To give you a big picture view of what the next steps are. So signing your plan signature pages, opening your bank and brokerage accounts, rolling over funds, etc. Now, this one right here, step number 2, is what I want you to focus on as far as where you're going to place your funds. Once you open your bank or brokerage account, then you can deposit your contributions. And yes, they can stay in the money market until you're ready to make your investment. The reason why I'm highlighting step number 2 is your solo 401k has its own special bank or brokerage account. You cannot put your contributions into your regular business checking account or your personal bank account and call it a 401k. It doesn't work like that. Use our guides, use our trainings that we provide for you on your documents, in the knowledge base, reaching out for help from our experts on the network, and then open a new bank account or brokerage account for your 401k plan. And that's where you put your contributions. And you might be saying, well, Rachel, where could I possibly open a bank account that's going to understand a solo 401k? Well, Rodney, I'm glad that you asked. Click on bank account recommendations as an article in our knowledge base. And this is going to give you some recommendations for banks that we train that we know will support the solo 401k. Solera Bank in Colorado, Titan Bank in Texas. They each have links to their online application, so it makes it really simple to just complete the application online right away. I talked to the Titan team this morning. They said that they are able to get you an account number in 24 hours. That's really fast. I know Solera is working through their queue as quickly as possible. They might need 2 to 4 business days to get the account open. Both of these banks are excellent options. They know about a solo 401k. They support a solo 401k. They're not going to put you through the ringer in getting an account open. We know them. We work with them on an ongoing basis. So Rodney, I would say for you, now that you've filled out the form and we're preparing your documents, congratulations again, then what you want to do is open your bank account. Once you open the bank account for the 401k, then you can make your contributions. Now, here's the next question that I know where we've been covering almost every day. So how to secure the funds for the time being to help for my 2020 tax return. I'm going to go back to our knowledge base, and I'm going to type in these magic words, formal election. This is a big thing for the IRS, how to formally elect your contribution by the December 31st deadline. If you are a brand new client and this is your first year having a solo 401k with us, then once you have your documents from us, you're golden. You're good. You're qualified for 2020. And the next step is to formally elect your contributions, which essentially means you fill out a contribution form. We link to it right here in the knowledge base article. Fill out this contribution form and very politely hand it to yourself. You are the plan administrator. You are in charge of how the money comes in and goes out of the plan. You are keeping records. So to formally elect your contribution by December 31st, fill out this contribution form, store it in a safe place. Once you have completed the contribution form, you have until tax day to make your contributions. So Rodney, coming back to your question here, if you can get your bank account open and make those contributions in the next, 9 days, great. By all means, please do that. But just having your documents from us is what qualifies you for 2020. As long as you complete that contribution form and then store that in your records, you do not need to send a copy to us, then you have until tax day to make your contributions. And that's going to set you up for a great tax deduction for 2020. Thank you so much, Rodney. All right, moving right along. Next question comes from Matt. Matt asks, I own 2 businesses. I own 50% of each. Business 1 is physical therapy, has multiple employees, and a simple IRA plan for all. Business 2, my wife and I, is real estate. And I would like to set up a solo 401k plan if possible. Is this possible? I'm being told that the simple IRA and employees of the first business conflicts with setting up the solo 401k, but I'm hoping for some confirmation either way. Great question, Matt. So this is a little bit more of an involved question. I would need a little bit more background here. First, I want to know who owns the other 50% of the business that has full-time W-2 employees. Why does that matter? Well, the IRS has this nerdy thing called a controlled group. Let me share my screen with you and I'll show you, you probably guessed it, a knowledge base article all about controlled groups. So controlled groups are essentially a way for the IRS to protect employees from being, essentially, if I may speak bluntly, from being screwed out of getting able to participate in an employee retirement plan. What they want to avoid, what the IRS wants to avoid, is someone like Jeff Bezos, right, who has, let's say, 50,000 employees. They want to avoid him spinning up a little single member LLC and throwing $57,000 in that LLC without having to offer Amazon employees a retirement plan. Now, obviously, for you, Matt, this isn't what happens in the real world. In the real world, you are providing an employee benefit plan for your employees of the physical therapy business. But the question is, are you a controlled group? If you are a controlled group, the IRS views all of your businesses as one employer. And that means all of the businesses follow the rules as if it's one employer. So remember, I was saying who owns the other 50%. If your spouse owns the other 50% of the physical therapy business, you own 100% because you and your spouse are one legal tax-paying entity. So in that case, even though you have the simple IRA for the physical therapy business, you probably cannot have a solo 401k for your real estate business. If your business partner who owns 50% is not your spouse, it's somebody else, it's an unrelated third party, then you probably can have a solo 401k for your real estate business because you are not a controlled group. The IRS thinks of you as two different employers, business A, business B, and they have two different rules. If you owned 100%, or you and your wife, you own 50, your wife owns 50 of business A, the physical therapy business, and then you guys also own business B, the real estate business, that's one employer in the eyes of the IRS. So the rules for one apply to all. So Matt, for you, if you have a non-spouse owner as the business partner for the physical therapy business, then yes, it's probably okay for you to have a solo 401k. Great question. We look forward to working with you. All right. We are moving right along. Marie. Hi, Rachel. I asked about foreign currency yesterday. Hi, Marie, but wanted to verify. My husband has a Roth IRA with a third-party self-directed retirement plan company. Through that company, he purchased foreign currency from a depository company. If he opens a solo 401k, can he transfer can he transfer or roll over that Roth IRA account from the depository company into the Roth solo 401k account and close the account with the retirement plan company? Is this the correct process? Thank you for the clarification. Love the question, Marie. Love that you're asking this. I'm going to have some unfortunate womp womp news from the IRS. Let me find the chart. So IRS rollover chart, and I'm going to share my screen again. I know you guys are just like, geez, you're sharing your screen every window. Yeah, because it's like we're able to actually hang out together and answer questions together. Okay, so I went to the Google machine. I typed in IRS rollover chart. This is a super duper helpful chart. I refer to it several times a week. So Marie, unfortunately, the IRS has special rules for Roth IRAs. We call them the red-headed stepchild of retirement plans. They don't play well with others. Once money goes into a Roth IRA, it is stuck there. So if you look here, if you're rolling from, okay, Roth IRA, can it roll into another Roth IRA? Yes. And then all these other things are no. So what we're looking at for this Roth solo 401k is a designated Roth account. See right here where it says designated Roth account 401k. Can a Roth IRA roll into it? No. So unfortunately, Marie, your husband would not be able to roll his Roth IRA account into a Roth 401k. Those are just IRS rules. The IRS is quite strict when it comes to Roth IRAs. Now, one thing that you could do is we can set up something called a checkbook Roth IRA for you. It's also known as a Roth IRA LLC. This turns a Roth IRA kind of into a solo 401k. It's composed of two parts. There's a self-directed Roth IRA and then something called a special purpose LLC. This LLC is not a business. It is a passive investment vehicle. And the point of this LLC is to hold your Roth IRA money so that you have direct control and you don't have to go through the custodian every time you want to do something. So that is an option for you, Marie, for your husband to check out a Roth IRA LLC. We can establish that for you if that's a path that you want to go down. But just looking at this question in particular, unfortunately, the IRS will not allow Roth IRA funds to roll into a Roth 401k. So if you want to get those into your control, a checkbook Roth IRA also known as a Roth IRA LLC, is something you'll want to consider. All right. Next question comes from Rami. Hi, Rami. I hope you're well. Yes, thank you. I took advantage of the distribution from my safe harbor through my employer 401k plan and deposited the money in my personal bank account. I think you're talking about a CARES Act withdrawal, Rami. I just want to make sure that I could transfer the money into my solo 401k and not trigger any tax events for the coming months, correct? By the way, Rachel and Jeff and Hannah are the best investment group for small businesses. Rami, you're great. If you guys were on the Q&A yesterday, you heard that I say group hug the clients. We mean it every day. You guys are awesome. So Rami, we've actually talked about this in a couple of Q&As now because the CARES Act withdrawals are such a mess for the IRS. I do not know how they're going to handle it in the next 3 years, but it's going to be very interesting. Let's just say that. So Rami, I know you've heard me cover this before. The CARES Act was a piece of legislation where the IRS was like, oh my God, we're in a pandemic. We have to figure out how to not have bread lines in the streets. Just let people have access to their retirement plans. We'll figure it out later. That's pretty much exactly what happened. So now we're trying to work through what does that mean for everybody to be able to be allowed to take money out of their retirement plan and put it back within 3 years and pay no taxes, or pay the taxes over 3 years and not put the money back. Rami, you will probably not be surprised that the IRS has released zero guidance on how we're supposed to be treating the funds moving around. It is okay to go from like to like. So you went from your pre-tax safe harbor plan to yourself and then put the money into your solo 401k. That's allowed. According to the CARES Act language, that's treated as an eligible rollover distribution. I know, nerd stuff. Eligible rollover distribution. We have no guidance yet from the IRS on what do they want us to put on tax returns. Is there some sort of a form that we're supposed to include with our 2020 taxes proving that the money was deposited on time? We just don't have that guidance yet. So Rami, what we've been telling people is treat the CARES Act withdrawal like an indirect rollover. So you might need to put something on your tax return saying that you put the money back. I'll share my screen. We have an article in our knowledge base. If you do a search for, where are we? Is this it? No. Here is it. Let's go here to support. Indirect rollover. So if you do, we're recommending, at least for now, because we don't have any guidance from the IRS yet, that you treat these CARES Act withdrawals and putting the money back as an indirect rollover. So Rami, this article in our knowledge base, I just did a search for indirect rollover. This is at support.solo401k.com. We'll walk you through how to document an indirect rollover. This is what we're recommending until we hear more guidance from the IRS. So unfortunately, at this time, we're just not sure what the IRS is going to do. I'm guessing they're probably going to come up with some sort of a form or some sort of a checkbox on people's tax returns. I think it's going to be a huge mess, but we'll see what happens. So Rami, I would say for now, work with your accountant and you'll probably be treating this as an indirect rollover. Great question. Okay, Sylvia says, do we need an EIN number to get a solo 401k? Great question, Sylvia. So you do not need an EIN to establish a solo 401k. And I will share my screen again and show you our application. So whether or not you will need an EIN really depends on your business structure. If we go back to our website at solo401k.com and you click this big blue button right here that says sign up, it'll take you right to our online application. Now, the online application is pretty straightforward, Sylvia. The top section here, you'll just put in some information about you. You're the account holder. And let me make sure, am I still sharing my screen? Yes, great. Okay. In the middle section, Then you'll tell us about your business. So I want you to keep your eyes right here, guys. You'll see that some other questions are going to magically pop up based on my selection. So bam, sole proprietorship. Okay. Does your business have a DBA? Yes, no. If you say yes, what is it? Do you have an EIN? Yes or no, I use my social. If you have a sole proprietorship and you do have an EIN, just click yes, and then you'll see that field magically appear. So Sylvia, when you're completing your application, just complete it to the best of your ability. It's okay if your business is a sole proprietorship and you do not have an EIN. It is allowed to start with a social security number. Once you have $250,000 or more in the plan, you will be required to get a tax ID number for your business. But if you're under that threshold, you can start with your social. That's okay. Now, we, Neighbors Group, are going to get a tax ID number, an EIN, specifically for your solo 401k. And we do that so that when you're opening bank accounts, brokerage accounts in your name, in the name of your 401k, you want to use that new tax ID number that we obtain for you. And that's going to tell the IRS, hey, any money that's in this bank account or brokerage account owned by the 401k and connected to that tax ID number for the 401k, that's tax deferred. Leave it alone. So you want us to get that tax ID number. You don't have to do it yourself. We'll do it for you. We'll get the tax ID number for your 401k as a part of your setup. We'll give you that EIN letter from the IRS. We put the tax ID number in your 401k plan documents. And then you use that tax ID number to open your bank account and brokerage account. That tells the IRS that those are 401k monies. Great question. Okay, next question comes from Vishal. Vishal says, can I make a contribution to my solo 401k as an employee and an employer for 2020 until the tax filing date, or does it need to happen within the calendar year? Great question, Vishal. So remember when we talked about formally electing contributions? That's what needs to happen by the deadline. So let's go back to our knowledge base. Remember those magic words, formal election. So formal election is what needs to happen by December 31st. And I think I have a link. Bam. This is what I'm looking for right here. IRS source. I love this IRS publication. Am I a super nerd? I don't care. So this IRS publication is so chock full of helpful information. It's IRS publication 560. Put that in your nerd notes. If we go to page 3, this fabulous little chart here. So Vishal, the solo 401k is a qualified plan, also known as a defined contribution plan. Right here, when to set up the plan. By the end of the tax year. So Rodney, remember you've got your documents set up now. Sylvia, if you're getting your documents set up, you need to have your documents from us by the end of the year. But then check this out, Vishal. Elective deferral, last date for contribution, due date of the employer's tax return, including extensions. Employer contribution, money purchase, pension plan, or profit sharing. You have profit sharing in a solo 401k. Due date of the employer's return, including extensions. So going back to your question, Vishal, you can make contributions to the solo 401k as employee and employer up to the date that you file taxes for your small business. Great question. Good job, Vishal. Love it. Okay. Something is being funky. All right, here we go. Next question from, so I think we've already got yours answered. Sylvia, I'm trying to just make sure that we're getting these timestamps correct. Okay, so done answering. All right. Next question from Vishal. I know that the solo 401k plan supports pre-tax, Roth, and after-tax contributions. Is there any restriction on filing pre-tax and Roth first before I push into after-tax? So no restriction. Actually, a lot of clients will fill up their pre-tax and Roth buckets first and then put the overage as the after-tax contribution. That's okay. Have your CPA double check your numbers, and that's okay. Next question from Vishal. If my W-2 has income, can I simply push everything into after tax, and then roll over to a checkbook Roth IRA. So Vishal, remember all contributions to your 401k plan are made based on your earnings from the connected business. So if you're talking about W-2, like another job, then that job earnings does not come into your W-2, or excuse me, does not come into your solo 401k. If your business that you own connected to the solo 401k is making money and paying you, you can put all of that into after tax and then push it into the checkbook Roth IRA. Totally fine. Work with your accountant, make sure they're double checking your numbers so that you're really clean on knowing who is contributing what. Because if you work a normal job, then none of that normal job money can come into your solo 401k. Your solo 401k comes from your business earnings over here. Okay, your business connected to your 401k makes money, that goes into the solo 401k. Okay, I know, I hope this is, but all right. So it's retirement accounts. We got to keep it, we got to keep it lively here, people. Okay, so let's see. I've got some questions here in the chat. We'll go ahead and put those into the questions so we can get to them all correctly. One moment. I'm just pushing them on over. Hey, Julia, welcome to you. Great to have you. Okay. We've got time for a couple more questions here. So Rob asks, when funding my new bank account for my 401k trust, I have 3 accounts: pre-tax, post-tax, and Roth. Yes, you're right on. Is there any minimum contribution I have to make to my pre-tax account? No. We allow you to have full flexibility with your contributions. You can maximize them 1 year, skip them 1 year, make just a little in pre-tax, make the majority in Roth. You have the freedom and flexibility as your own plan administrator and as the employer to change up the contributions on whatever schedule, amount, and tax classification that you like. Good question, Rob. Okay. Rob's next question: which brokerage account would you recommend that has the least amount of fees? Honestly, these days, I feel like with the brokerage accounts, it's kind of a race to zero with fees. I don't really know if any of the big brokerage firms are charging trade fees anymore. I know that Schwab and TD, as part of their merger, they're not charging trade fees. I use Schwab personally, and I think they're fine, totally fine. I'm not like in love with them or anything, but they absolutely serve the purpose for giving me a brokerage account for the 401k. So they're great for that purpose. And I have index funds and things with them, and I don't even think that they charge me the fees. And if they do, I don't even notice it. It's really small. So I don't have a strong opinion on which brokerage account to recommend that has the least amount of fees. We work with all of them. We work with TD Ameritrade, E-Trade, Vanguard, Fidelity, Schwab, Interactive Brokers. I know some clients are working, they're kind of going out in the field trying to get accounts open with Betterment, Wealthfront, Wealthsimple. I'm working on M1, but they haven't gotten back to me yet. We're all kind of figuring out different ways that we can find compatible brokerage accounts other than just like the big guys. The big guys are fine. They serve their role. I find customer service is not always that awesome there, just because, it's not their fault. If Fidelity has 200,000 accounts or something, they can't always have someone available for you immediately. So there's a little bit of trade-off there. Rob, I would say, if you have a preferred platform for your personal investing now, see if you can rinse and repeat with a 401k. The only ones I know that absolutely don't work are things like Robinhood. Robinhood does not support retirement accounts. They don't support trust accounts. So that won't work. But all of the other major brokerage firms are okay. So, all right. Yunhee asks, did I hear you correctly? The IRS has said that we can all withdraw from our traditional IRA as long as we put back the same amount within a 3-year period. Yes, that's right, Yunhee. I'm going to share my screen again. So in March of 2020, the IRS passed a piece of legislation called the CARES Act. And actually, even if you go right to our main website, I think it's still on the main website here. Let's see. Bam. This link right here, Yunhee talks about the CARES Act. And the CARES Act was a groundbreaking piece of legislation that allows people to take a withdrawal from their 401k and IRA. You can take out up to $100,000. You can never put it back and then pay the taxes spread out over 3 years. Or you can put the money back within 3 years and not have to pay any taxes on it. Now, each firm is different. So depending on where you have your IRA, you need to contact them and see if they're allowing the CARES Act. Not all firms have adopted it. Of course, we adopted it right away. We have a self-certification form for the solo 401k. If you have a solo 401k with us, I'll just share. Hopefully I'm still logged in here. Dope. Let me see if I can get to it a different place. I don't want to have to type in that big password again. I'll just go here to forms. Easy button. So if we go to solo 401k forms, right here, we've got the coronavirus related distribution form. If you have a solo 401k with us and you need to take a CARES Act distribution, this is a self-certification form. Fill it out, hand it to yourself, move the funds from your 401k bank account to your personal bank account. We have a lot of writings on it in our knowledge base here. So if you do a search for coronavirus, then you'll see we have a lot of articles about exactly what the CARES Act does. Make sure you're reading those out. And Rami, this I think is speaking to your question from earlier. Can I take money from one plan and redeposit it into another account? Yeah, you can. And I know that that's what you were able to successfully do. So great question, Yunhee. And yes, you can take that CARES Act withdrawal if you were adversely affected by the coronavirus. So, okay, next question from Yunhee. If I set up the plan by December 31st, 2020, will I be required to make any contributions or do anything in 2020? So I know that this is a question that we cover pretty much every day because let's face it, it's one of the big ones that people have when they're getting their plans set up by the end of the year. Julia, I think that this is your question as well. You want to know how to elect to make a contribution for 2020. So Yunhee and Julia, if you set up your documents with us, and the IRS closes tomorrow, okay? They close tomorrow at 5 p.m. So that's the last day for the year to get new tax ID numbers. It's not the last day for us to prepare your documents. We will continue preparing documents through the end of the year. And what we do every year is we will put a placeholder tax ID number where your 401k trust tax ID number will go so that we can still draw your documents. We want you to have the documents so you're qualified for 2020. When the IRS reopens on January 4th, we'll get everybody's tax ID number that came in after the IRS deadline or after December 23rd. And then we'll redraw your documents. They will still have an effective date of 2020. So the IRS closes tomorrow. If you are watching this webinar and you are thinking about completing your application, I would recommend don't delay. Complete your application today. That way you can be sure that we can get your tax ID number and have that for you. Otherwise, if you complete your application Thursday, Friday, Saturday, Sunday into next week, you still will have your documents from us. You still are qualified, but you can't open a bank account or anything until after the first of the year because you won't have a tax ID number for your 401k plan. We have to wait to get the tax ID number after January 1st. So as far as Yunhee and Julia, what do you need to do to make this thing official so that you're all set for 2020? And I know those of you that have been joining us for the Q&As, you probably know what's the 2 magic words I'm going to type in here. 2 points for somebody that gets it. I know you will. I believe in you. It starts with an F. Knowledge base. Good. Yes. Very close. Formal election. We're looking for formal election. So the IRS wants you to formally elect your contributions by the December 31st deadline. What that means is, there you go, Jorge. Jorge's been on these every day. Yes, Yunhee, you get a prize. High five. So The formal election. What this does is this tells the IRS, hey, I am making it official. I want to make contributions for 2020, but maybe my books aren't closed yet, or I'm still waiting on final payments. So this formal election is what you'll do to make sure that you are that you count for 2020. So Julia, I know you were asking this as well, wondering how to elect to make a contribution for 2020. This in the knowledge base. So just so you know how I got here, either from your 401k dashboard or from our website, you just click on support. That'll take you to our knowledge base. And then I typed in formal election. Even formal, not FOMO. Formal election. That's going to take you right to this link, which is how to formally elect your contribution by the December 31st deadline. I'm going to post this in chat, so it's really helpful and easy to get to. Now you can all click on it, and if you need to read through that. So what you'll do is just follow the steps in this article. It's quite simple. All you need to do is complete the contribution form, stash that in your records, and then you're done. Really, that's it. You just complete the contribution form, stick it in your records, maybe give a copy to your CPA so they know how much you plan to elect. If you get a W-2, you want to make sure you're telling them, hey, here's how much we're putting in from our earnings. But once you complete this contribution form, then you are officially golden for 2020. So great question, Julia. I hope that helped you as well. That's going to be how you can elect to make a contribution for 2020. And remember, once you make that formal election, you have until tax day. That's April 15th or extensions, or March 15th if you have a multi-member LLC. You have until tax day to make your contribution and actually deposit the funds. All right. Next question comes from Sylvia, and this is going to be our last question for right now. If there was anything that I missed here, then let me know. Oh, Yunhee, I do see your question, so I'll get that, and then that will be our last question. So Sylvia, what is the benefit of a solo 401k over a self-directed IRA? This is a really good question. I think that there's probably 3 things that I think that are really valuable for a solo 401k over a self-directed IRA. Now, first of all, if you don't qualify for a solo 401k, if you don't have a business, or if you had a business and you're retiring, then a self-directed IRA is awesome. It's a great retirement vehicle. It's a wonderful tool to help you get control over your retirement funds. And if you qualify for a solo 401k, it tends to be more awesome. So a solo 401k is cheaper to set up and maintain than an IRA LLC, or a checkbook IRA. There's less moving parts, so there's no custodian with a 401k. By law, you have to have a custodian with a self-directed IRA. That's who holds the money. The contribution limits for a solo 401k are much, much higher. With an IRA, you can put in a maximum of $6,000 per year, or $7,000 if you're age 50 or older. With a solo 401k, you can put in $57,000 per year, or $63,500 if you are age 50 or older. So big contribution limits, cheaper to set up and maintain. And then for real estate investors, a lot of us are real estate investors, then the advantages are definitely in the camp of solo 401k. So without going too much into a tangent, there's a mortgage tax that IRAs have to pay that 401ks are exempt from. So if you're a real estate investor, and if you're investing in a deal that uses leverage or financing, like a syndication, or you're buying a single family rental that has a mortgage on it, if you buy that property or buy into that deal with an IRA, you have to pay a tax. The solo 401k in the exact same deal is exempt. So Sylvia, if you qualify for a solo 401k, I think it tends to be more awesome. Cheaper to set up, cheaper to maintain, no custodian, higher contribution limits, no mortgage tax. I guess that's 5 things. So anyway, all right. Last question here. I don't want to melt your brains too much. Okay, 2 more questions, but then we're really calling it. So Yunhee says, since the CARES Act applies to businesses, how will that allow me to withdraw from a traditional IRA? Yunhee, the CARES Act applies to taxpayers. It does not apply to businesses. So you can't use our self-certification form for the solo 401k, of course, because that's for taking money out of a solo 401k. If you have a TD IRA, you need to contact TD and you need to ask them if they have adopted the CARES Act. And if they say yes, then you can say, great, how do I do a CARES Act withdrawal? That's what you want to do. Contact TD, ask if they have adopted the CARES Act. If so, ask how you can do a CARES Act withdrawal. Not all providers have adopted it, so you need to find out from them. But the CARES Act withdrawals are meant for taxpayers, not businesses. It's to allow people to get money out of their retirement plan temporarily because of the economic hardship that we experienced globally as a result of the pandemic. Great question. Okay, last question. You guys are so awesome. And do keep in mind, we're here every single day. I mean, I'm going to be here on Christmas Eve. I'm going to be here on Christmas. I'll have maybe a hat or a festive tree, or we'll keep it festive. But, oftentimes the holidays are when, you're done making dinner, you're waiting for everybody to sit down to eat. You can sneak off in the other room. You just thought about, now you actually have 5 or 10 minutes free. You can get that solo 401k application done that you've been putting off for the last couple of weeks. So we will be here for the Q&A even on those days. So no worries if you don't get all of your questions answered today. Get your solo 401k plan set up and then come join us tomorrow or the day after so we can be here to help you with your questions. All right. Last question, Marie. To clarify, my question from yesterday. My husband and I received 1099 income from 2 separate employers. We file Schedule C as a sole proprietor. My husband's business and my business have no employees. I do work with my husband for his business. Can he set up a solo 401k with me, or do I need to set up 2 solo 401ks? Can he pay me 1099 for this year so as to have 1 401k? Yes, the last part. So if he can pay you 1099, then you guys can have 1 solo 401k plan. If you file jointly, you might show all of your income on 1 Schedule C. If you just have 1 Schedule C, then you just have 1 401k plan, and that's certainly the most elegant solution. So that's great. Thank you so much for your question. Oh, here we go. Sylvia popped in with one more question. And then Julia, I see yours too. You guys are great. I love all your wrinkly brain questions. Okay. Sylvia, I went to the IRS to get an EIN number because I'm rolling over more than 250, but according to the questions they've asked, I don't need one. Should I get one anyway? Well, Sylvia, this is probably for your business. If you have a sole proprietorship, then yes, you should definitely get an EIN for your business because the IRS will require it if you're rolling over more than $250,000. They don't require it immediately, but they will require it by July of next year. We could get into more on another Q&A session. There's a form that you'll need to file. We'll help you in July of next year. And by then, the IRS is going to say, oh, when you're filing this form, you can't put a social on there. So it makes things a little easier for you if you can get an EIN now for your business. Remember, don't get an EIN for your 401k. We're going to do that for you. We know how to do that. So let us be the experts there. We will get the tax ID number for your 401k. Sylvia, all you need to do is get the EIN for your business that's sponsoring the 401k. Okay, final question here. Where do I submit my questions for tomorrow's session? You can submit them right in the chat. This is a great place to submit them, Julia, or go right on over to solo401k.net. I'm going to put the address in the chat here. Solo401k.net is our network. This is a great place for you to submit questions. Our experts are on there answering the questions live throughout the day. If there's any that we don't get to immediately, we bring them on in for the daily Q&A sessions. So you can post the questions here in the chat, Julia, or better yet, go right on over to solo401k.net and then make sure you're posting the questions there. And our team goes through solo401k.net all day, every day to make sure that we are answering questions and then bringing those questions in for the Q&A. Once again, great session today, you guys. You are doing such a fabulous job. I'm so glad to see how you are really taking control of your financial future. Marie, I see you, 2 separate Schedule Cs. If he pays you 1099, just do one solo 401k. So you guys are doing such a great job taking your financial future into your control. Keep going. If you have not yet submitted your solo 401k application, get it in today. The IRS closes tomorrow. We can still get your documents ready, but there is a little bit of a delay for you having your tax ID number. There's no need to wait. Get your application in today. Let us prepare your documents before the IRS closes for the year. And if you have any other questions, let us know. We'll be right back here tomorrow at 3 p.m. Eastern. See you tomorrow.